Good morning. Today is Saturday, January 25th, 2020. The weekend report, the S&P 500's 3330 wall, at least for now. We will discuss this, show you key levels. We're going to actually jump into it right away. So we're going to skip the intro and so on. I have thousands of charts to look through this weekend. So we want to get moving on that as soon as possible. So we're going to go over quick some education and then we'll jump into the 2-minute drill. So again, some clients are like, what is the SPX? What does that stand for? It basically is the overarching benchmark that we watch, the S&P 500, which many analysts, many advisors view as the benchmark. It is 100% equities. So again, if you are not 100% equities, do not compare your performance to the S&P 500 because you're likely not going to outperform the S&P 500 long term because this is all equity based. So 500 of the largest companies in the US. That's the short version. So we watch the overarching market to say how is it performing, because realistically 4 out of 5 stocks on average follow the general market. So we start there, then we dig into sectors and we dig into individual companies. So that's why my clients understand there are times where the S&P 500 could be up significantly and we could be underperforming at times, or vice versa, because we are not directly invested in the S&P 500 index itself. I realistically am picking a lot of individual companies. Some are in the S&P 500, many are in the NASDAQ at this point. So just wanted to clarify what that means and why we start at this level. So in short, first of all, this is important because many of you are not used to seeing this. This is basically a daily chart of the past month. So this is an hourly perspective, so very, very short term. So understand that this is not your typical long-term perspective that I usually show you. So note this short-term 1 month hourly perspective. That's important. So we've been saying, as the title of the entire session states, 3330 has been a wall, and that shows it right here. 33, we test it, go down, went a little bit higher, struggled to hold, went down lower. This was actually this week and actually held key levels, tested again, went down. We are now short-term testing. It's called a gap up, right around these levels. And so this is considered a gap filled, which is good price action. We'll see what happens Monday, but that is the short-term version. So we've been in a tight range for quite some time between the 33.16 and 33. This should say 33.30. I will correct that, but it's basically 33.30. This is the tight range we've been in. This is good price action. Struggled to pierce above. Doesn't surprise me because we've been overbought for quite some time. So now we're going to go into the 2-minute drill, hit some of the topics, and we'll move forward from here. So hopefully that little session helped. So this is the more long-term perspective. Again, there's a lot of lines here, so we're going to break it down for you. The market on Friday closed at 32.95. Finally had a close below the 10-day moving average. Hasn't happened in a while. So this purple line, if you can pay attention to the purple line, we've been riding this for quite some time, and a lot of institutions watch this level. So we tested lower, really close to the 20-day moving average at the 32.74 mark, pretty close to there, and bounced higher. So we're kind of in no man's land right now. Don't want to do too much, but I would not mind seeing tests at these following levels. The 32.74, which is the 20-day moving average. I'm showing you support, which is the red lines here. Okay, support below, resistance above. So where I think if this holds, hypothetically, if this holds, we could test 3,300 quickly and also test 33.30 again. So keep that in mind, but resistance is above, support below or at these levels. The 50-day moving average could very well happen right around the 3,200. That's a common area with the with the 50-day moving average and the lower Bollinger Band. Very close price action there. And finally, if let's say hypothetically we go to a low point, which would be a consolidation area of 30.97. If we do that, that's basically a 6% move down from where we are. Guys, that happens every year. I don't have a crystal ball. This very well could happen. But clients, you should feel very good at this point because we have about 35, in some cases 50% of assets in cash because we basically said this move is a little bit extended. Just being a realist, you're seeing it was extended. I've been telling clients it's a little extended. I still think this is great price action midterm. Let's just get out of the RSI of the 70 area. Let's maybe test RSI relative strength index at 50, maybe bounce higher. Again, these are all things we watch. Nothing's a crystal ball here. So let's move to the next chart. We're going to move a little faster. The momentum versus value. This is really interesting. In November, we tipped you off to something that we thought was really interesting. Look at the divergence between value and momentum. Momentum is green, value is red. This is November, okay? And usually it's a cycle of growth or value playing catch up with each other, okay? So now look how much recently growth has played catch up. That's significant. So in short, I'm saying be careful with momentum growth areas. You could get hit pretty hard here. So in short, I'm saying if the market does trend higher here, it probably will come from value. I don't have a crystal ball. It very well could extend higher from momentum. But I just want to keep you posted that this is something we're watching just to be cautious. I wouldn't mind seeing a little lower testing, to be honest with you. And just for perspective, this is going to take us over time, but that's okay. I'm going to do something here so you can kind of see the S&P 500 relative to these things. So hold on one second. Sorry for the delay. Price performance, S&P 500 within the chart, behind price. Now we'll update. So the blue line in here is going to be the S&P 500. It's right where it should be, right between momentum and value. So you're seeing the correlation. Hopefully you might have, that helps bring things into perspective, saying, okay, I think we're a little bit overbought here. Let's see if value plays a little catch up. I don't know. I'm just saying it could be possible that both are a little bit extended, which I do think short term they are a little bit, and the whole market could go down a little bit, and then hopefully they ride together. So just kind of interesting perspective, something that I'm watching closely. Finally, the put call ratio. We've been telling you there's been some complacency recently. Anything below 50, you're saying, there's some complacency. Doesn't mean it's going to be a sell-off, but usually stupid things happen, whether it's a virus or whatever. Something stupid always will happen. We get out of the put call ratio range, and there's usually better opportunity. So just kind of keeping you updated on the put call ratio. The VIX, we did get out of the levels where I'm saying, hey, stupid things tend to happen in this level. We've been here for quite some time, finally pounced out. Usually the market tends to do and grind within this level and tends to do a little better because there's less complacency. So just kind of interesting. The VIX is a fear level gauge. And obviously with the virus, there was a spike, which is not surprising because when you're elevated as much in the market, little things are going to move the market. So it's good to see the market is real at this point. That's the summary there. Bull versus bear markets. This is kind of interesting. The National Association of Active Investment Managers. This is showing the amount of overall equity exposure. In short, we are at pretty high levels. This is, again, just active managers. Even on the passive side, there is less cash on the sidelines. So months ago, even at the beginning of the year, I was saying there's still a decent amount of cash on the sidelines. That's not exactly the story anymore. Now, midterm, I want to make this very clear. I do think that there's still plenty of room to run. This doesn't mean that this cannot go higher. In fact, if we looked at the buy and hold strategy, where many analysts will probably hold for the entire year, there's very little in cash. So it's very possible that we see a dip short term, and midterm things look pretty decent. That's my stance. That's what I think will happen. Again, I don't have a crystal ball. I'm going to watch price action every day to dictate my moves. And finally, the bull versus bear. This is not to scare you. I posted this Friday. This is just a reality. The percentage of bull managers is at the highest level since October 2018. Long span, but look what happened in October 2018. It's not to scare you. Different times. The Fed was saying we're going to increase interest rates. Clearly not in that environment. The Fed is not going to hike interest rates. They basically said that for the entire year. So different environment, but it is a realistic factoid that we want to pay attention to. So I hope this helps. I want to get this out quick. Have a lot of charts to sift through, but wanted to at least get something out to you this weekend. Watching closely. It was a shortened week, so that's why we don't have a full 5-day week to be able to show the weekly performance. That gets tricky. So we're going to watch price action. Clients, you should hope, and this is something you have to understand psychologically, that I want you to change your mindset, especially because I'm a little more active and I'm not just sitting in buy and hold areas. You should be hoping the market does go down because we have a decent amount of cash to be able to deploy. And again, the overall market historically is likely to go higher. So if we slowly add on the way down, this is the best thing that could happen for you. Sure, you don't like watching your account short term during those periods, but if you change your mindset to that, you're going to be a better investor, period. Ignore my performance, but you will naturally be a better investor psychologically. So I hope this helps. Let us know if you have questions. Have a great weekend. Bye.